Good Whipsaw Wednesday, everybody. How are you? Mike, Kurt Bell, hello. Ingmar, Sinatra. Who is going to not get whipsawed today? Give me a why. Hi, Steve and Blake and Kay and Hugo and Bran and Ryan. How are you, AJ? Okay, Bran's got a plan. James Groom. Okay, so let's take a look around. We have a little bit of a bounce in the euro. It's a little stronger than cable. And S&P's huge move yesterday, threatening highs. So let me just get to this here. I wanted to start off with an example of market tells. Okay, so we had this huge update in the S&Ps yesterday. We're almost at new highs. And when a stock can't hurt you on a huge update, it doesn't respond, actually closes a buck lower. That's kind of a market tell that there's not a lot of flow into the stock. All right, so there's Uber. I was hoping for a rally back towards 88, but I think we're getting a little bit wobbly up here in the S&Ps. We still haven't made new highs. Let's just take a quick look. But even at, oh, here we go. Okay, so let me move Steve. We're about to make new highs. And this to me looks like 1, 2, and a 3 up there. NASDAQ's been stronger. NASDAQ, is it at, nope, not new highs. So let's see what happens up there. I think NAS is going to also not confirm. I just want to go through the Mag 7s, which led the decline and led also the rebound. So here you go. Would you buy Amazon? Would you buy Apple? Actually, really still weak, hasn't even got back to its May highs. Would you buy Meta? Diverging pretty good up here. Google has been the one of the weakest stocks. It's barely recovered. You look at a daily, maybe with the S&Ps on the verge and NASDAQ on the verge of new highs. At the most, I think we have a 50% correction here in Google. This could be interpreted as setting up some type of bear flag. Here's Netflix, which is, inhaled some helium, but is stuck on the ceiling. Check this out. Check this out. Last week it, had that $20 down day. I would not be long Netflix up here. I think they could crack it. Here's Nvidia. Looks, one of the best. We'll see what happens up here. And so, a lot of the Mag 7s, they don't look great. So,
Hey,
but
hey,
go ahead.
hey, Coach, I was gonna ask you something, and good morning, by the
Good
way.
morning. Yeah.
One of the things that I've been sitting here being very defensive in the market, thinking, okay, we've got all these risks, and the fact of the matter is, the sell-off, and I'm not talking about Nvidia specifically, but just in the markets. The sell-off and that basically that 20% move lower and then reversal really quick probably left a lot of people not in this rally, not engaged in this rally. And the constant trade war with China and the EU and everybody else, it probably has a lot of people sidelined at the moment. So it isn't the risk right now that the data doesn't turn horrible. I mean, earnings season was decent. It really was. Yes, did a lot of companies omit, forward guidance and whatnot? Yes. So next quarter is going to be really interesting. However, most companies beat earnings like 70 some odd percent. I forget what the exact number is. And I mean, you have a situation where, if the economic data is not bad and people are just forced to chase the market, couldn't we just hit new all-time highs? And that's I think one of the bigger risks right now is that the trade wars, it lingers on, maybe nothing really bad happens, still negotiation. Trump keeps chickening out or taco trade, so we keep pushing back deadlines, and your 90-day tariff relief turns into 100 and 80-day tariff relief, blah blah blah. Next thing you know, S&P is trading at highs this summer. I mean,
That's not a real aggressive call. We're only 100 handles away.
no, it's not. I don't think
And
it's. I don't.
when I presented, I'm not bearish the market. I'm bearish Uber. I'm bearish Google. S&Ps, there could be a scalp. And even if and I agree that we're going to make new highs, Blake, but we could pull back to 5,600 first. And the weak stocks that are showing relative weakness to the broader market on just a little pullback like this, maybe 10%, 7% could get smashed. So that's why they call it a stock market. It's a market of stocks. And there's always, leaders, and there's always laggards in any move, in a bear move as well.
Oh
So
yeah.
yeah,
Look, if we hit all-time highs, I'd be more curious of what stocks aren't moving higher. Whether it's the Mag 7 or whether it's Nvidia. I mean, whatever it is that's divergent up there. But I think for the broad markets, I agree with just what you said. I think that we can hit all-time highs here. And it's not that the stock market is deserving of it. I think it's more of a positioning move.
yeah, all this,
Um,
they say a lot of institutions are on the sidelines. This rally was mainly detail, but I'm counting on the power of that you're correct, and a lot of institutions need to deploy capital,
yeah.
and big money is usually powerful enough that if they want to get long, they'll engineer a decline for them to do it, and when they want to get short, they'll engineer a rally so they could distribute. So but when you look at something like Uber, it's got a little different narrative. They came into this stock because they started to look for stocks that would not be affected by tariffs. Okay, Uber's not affected by tariffs. It doesn't export or import anything but people to sit in their cars. And so if the narrative is right and the Mag 7's leading it, then the need to be in non-tariff stocks disappears, and they're going back to, the same old, same as it ever was. The Mag 7 leading the way. So, that's why Uber, and you know what? I don't care what's happening in the market. When I get a formation like this, that's, right out of my three drive Bible, um, I don't care what the market's doing. So I projected the high up at 90, and I said wait for the first red candle to go with it, and now we're threatening the 9 week. So if we had a pullback in the S&Ps to 50, some kind of pullback, and I do think there's going to be some kind of pullback, this could really take it on the chin. I mean, I could see low 60s, a lot of confluence at 50, and that's like 30%. Uber's already down 10% with the strength in the market over the last week. So, I'm just looking for canaries. I love birds. Hello?
Oh yeah, I'm
I
here.
love birds too.
We're
You
here.
like birds? I,
Yeah,
you know, I love watching birds,
I
birds,
feed
birds
I
especially,
has a
feed my
different
birds
meaning now.
daily.
really, what kind do you have? Parakeets?
No, we have lovebirds actually here, and
Oh, I thought that
where
was you and your wife. So there's four. So you have four
yeah, no,
Hey,
lovebirds
we,
in the
we get
house.
the little green
you
lovebirds.
you stole
They're
my
wild.
joke. I was about to say that.
Well, Steve,
We think
yeah,
alike.
we need new medication so that we could be faster. But anyway, that's it. As far as currencies, I'm going to bring the experts in. All right, because I'm just a host. Um, Ryan, Ryan Littlestone, how
Morning,
are you
sir.
today, bro?
I'm good,
So
mate.
Okay, buddy. So, pretty hard down day in Euro yesterday. There's a weekly right now. Looks like it's a failing rally. What are you doing with the dollar and euro right here? Well, and I see that you guys pointed out um, on X that this is just a 38% pullback, and it did come to a support level here.
Yeah, I mean, I'm still not doing anything. I'm not interested in messing around in the middle. I'm sticking to my edges if I can get a trade there, because we're getting a lot of up down, up down, up down. Dollar yen, you get seasick trading that one. It's the way it's up and down and up and down. Again, we're bang in the middle of the range, pretty much 142 to that 145, 46. Aussie dollar, it's holding the 40. It's spent the longest.
Classic. Yeah. I mean,
Yeah.
we had to get through here. We got through here. We pulled back and retest, and now we're on the way to take out this high, and I think actually this high as well. So this is a classic textbook chart on how old resistance becomes new support with confluence of moving averages, etc. Do you have upside targets if we get through, say, 65?
If we can get above 65.10 and hold it, then we should be moving on to 66 pretty quickly at the very least. But we've still had these moments. If you go back to early May, we had similar. We got above that 64, 40, 50. We held it. Back one more, and then we still managed to fail. You can never say never. If you're long off that level, then you need to, take some profit when it's there, and be careful if we do break back below it.
Okay, and maintaining shorts on US dollar yen, or did you book it?
No, I got knocked out on my trailing stop, which I'm not going to complain about. 250 pips in the green. 143.50 was my pain level on any bounces, and thanks, mate. And here we are again. We traded at the bad news. It only goes so far, and if you don't get extra, then you get a strong reversal. We've seen that for the last couple of months. Get those rallies high, then they get knocked down on bad news, then we bounce. We have got a bit of a wedge potentially forming. I'm not one to usually look at those, but I've had it on my chart. You can take those first two lows.
Can we do something like this for the top of the wedge?
Go back a bit further on that one. Let me check my chart, then I can tell you.
And by the way, we do have ADP data in 2 minutes.
2 minutes.
Okay. All right.
Go back to March and then take it off the more recent lows, and then you'll see. But so that's good enough for government work, as you like to say.
Yeah, for government work. So go back to March. Back here.
Yeah, a bit further.
Oh gosh. Okay, March.
We'll show. I can show
there,
that. I can show
there it is. There it is.
Yeah, there
it's right up here.
Yeah.
Okay. Okay. So I guess get to the ADP. I just wanted to mention to everyone that both Blake and Stell talked about Canada sitting on this major trend line, and I think it's on the verge of breaking it. So pay attention.
I was just going to say, we were just having a conversation about that in the chat room. I mean, we were, K-Man's short a little bit, and I can let him talk about it in a second. But man, it does look vulnerable. And I've been one that's wanting to actually sell Canadian dollars, meaning be long, dollar CAD, euro CAD. But man, price action is, ultimately is what's driving the market, and it's like it doesn't look so hot right now. So I'm thinking about going the opposite direction, especially following the Bank of Canada later today. We got 30 seconds before the data comes out. To the left, you see the S&P right here. We have the dollar index right in the middle. 10-year yields. These are all 15-minute charts, all right here. And then the data flash that we dragged off of Forex Analytix is right here. Now, last month we had 62,000 jobs were created, private sector jobs. This month we're expecting 115, and the data should be out in just a second, guys. Actually, 2 seconds. Here we go.
37.
Ooh, God, that's not good. That is not good. All right, so S&P is coming under a little bit of pressure. Dollar's coming under pressure. Yields coming under pressure. We have the euro tracking back up towards 114. Right now, it's about at the highs of the session. 114.04 are the highs of the day for the dollar index. You know, if there's one thing that can really impact impact a U.S. economy, it is and the Aussies trying to make a move, is jobs. And it's all fun and games until you start losing jobs. And then once you start losing jobs, things get a little bit trickier with anybody's analysis, macro analysis of an economy gets a little bit more challenging. So just
It's a
taking a look
great dip to
around.
buy, a great dip to buy for a move to new highs here, right?
Yeah, I mean, hey, if the S&P is gonna, if people go, hey, you know what, the Fed's gonna stay looser for longer, I'm not trading the S&P up here. I mean, I'm just not. But what I am doing is I am selling dollars. So, and I'm long euros, long sterling, and I'm expecting higher prices at this point. There's a lot of reasons for it. And as you just talked about, and the guys posted this morning, the euro held the 38% retracement. We've held this broken trend line. Talked about on the week ahead video. Talked about buying the dip, and it's holding very well. It has been very sticky, just under 114. So, wouldn't be surprised if we see back up towards 114 and change, ahead of the ECB, which is tomorrow. So let's talk a little bit about this CAD, since we are nearing that major level. And you can see this big breakdown point that's coming in here. K-Man, you were talking about this in the chat room. You and I were. How do you feel about the Canadian right now ahead of the Bank of Canada later today? K-Man, we can't hear you. And I know you're leaving out of town later today too. So, oh, we can't hear K. Am I the only one, or can you guys hear him?
I can't hear him.
Okay. He is out for the count. Yeah, I don't know. K-Man, sorry, we can't hear you. But let's ask Ryan and K-Man, just chime in if your voice works. We'll stop what we're doing. Ryan, what are you thinking here? We have the Bank of Canada later today. How do you feel about what the BOC is set to deliver? I mean, are they gonna give us a surprise cut?
Well, not according to everyone now. Everyone's sort of changed their expectations, particularly economists and whatnot. All the calendars have now updated. They were all expecting a 25 pip cut at the beginning of the week. Bloomberg now expects unchanged, and I'll check Reuters. Reuters now expects unchanged. So looks like everyone's adjusted. I was looking at that to see if there might be a little algo blip if those calendars were still expecting a 25, but it's all
you were talking about that on the trade-off show with Michael Brown.
Yeah, but it looks like everyone's come around to the fact. So will they surprise with a cut? That puts the risk if they do cut now, because no one's ready for it. But I think, given the data that we've had recently, GDP, CPI, that was all better, hotter, I think it's likely that they stay on hold. But never say never.
All right. K-Man is back, and I just want to point out really quick, you go back to the lows in 2021 to the highs, this year, but following all the tariff headlines and whatnot, we're at the 38% retracement. So, that's how important, this support is. I mean, this support is a trend line. It's the 38% retracement. It's really do or die. I mean, it's the difference between the dollar CAD going to 150 or the dollar CAD going to 120. I mean, that's how big the 38% retracement is, because on a pullback, when you talk Fibonacci's, a 38% retracement is about as shallow as you're going to get in a resumption of trend. When you start breaking that and you start seeing the 50% or the 618 or whatnot, puts you in a bigger trend range. And right now, we are at that 38% retracement. So a break below these lows would be, technically speaking, not a bullish sign. K-Man, it looks like you're back. You had to log out, log back in. Can we hear you? We still can't hear you. We still can't hear you. All right. Well, K-Man, I know he is having some issues with his mic. We will see you in the chat room. Remember, if you guys want to chat with K-Man directly and have conversations like this, let's go over to the general chat room. And when we were just talking about the dollar CAD about half an hour ago, which would be right about, right about here. If you want to have these types of discussions about, what's happening with the dollar CAD, talk with K-Man directly, you have to be a Forex Analytics subscriber. And so if you guys want to check it out, it's $1 for 10 days to check it out. So make sure you take advantage of that, because our sale is our liberation offer is off now. So that
If
means
I
you guys
may add, Blake, if you want to hear
Yeah.
K-Man as well, we had a pretty good flow show today. We were talking about stop losses.
Actually that's I'm okay. I'm glad you brought that up. You had a really, really in-depth conversation from Mark, right? I don't know if it was Mark, but Mark this morning asked a really good question. He says, "Hey, Ryan, K-Man, and Blake, general question: how many pairs, indices, etc., do you follow at any one time, and how many do you trade at any one time? Thanks." And that came from Mark. We came with our responses here, and these are types of conversations we have in our chat room. So if you're, as a trader, you don't. If you want to have these types of conversations with, people that have been doing this for a long time, this is the place to do it. And plus, on top of it, you get this really wonderful tool, which has different news flows, feeds, live squawk feeds, so you don't have to try to comb through social media. You can know exactly what's happening at any given time as it's happening. As soon as that news is released, headlines, true social posts, all that stuff. It's right here on Forex Analytics. Plus, you get analysis of 30 different instruments, not just currencies. There we have boons, we have Bitcoin, we have S&P, we have the DAX. There's a lot of different instruments that we cover, not just currencies.
We have Grega, we have Andre.
Yep, Elliott wave analysis. That's right, Elliott wave
Harmonics.
analysis. Harmonics. Yep.
Yeah, got it all.
Got it all. So make sure you take your $1 trial. It's $1 for 10 days. And I hear something beeping at me, which means that the euro is breaking 114 and highs of the session. So matter of fact, I'm probably going to be taking a little bit of mine off here ahead of some of the stuff. So Ryan, how do you feel about this news that just came out?
What, the ADP stuff?
Yeah, ADP stuff.
Yeah, it's given the market another little nudge to say, hang on a minute, maybe we are going to see some weakness in jobs. Market always uses that as a bit of a bellwether for what's going to happen, make those last minute adjustments to NFP. It is a soft one following a previous soft one that got revised down as well. So yeah, and we got the ISM coming up, and who knows? We saw jolts yesterday, expecting it to come in softer because of what we've heard, and it comes in a high one. So you just never know with this market at the moment.
Yeah, the services data is important today. Obviously, we are a services economy, as everybody here knows. So it's going to be, the ISM data is going to be pretty important today. And if the employment component there comes in weaker than expected, people are really going to start leaning into the dollar shorts going into the jobs report, which I don't necessarily like, because that means that we're on a weak number. Like, let's say, what's the market looking for, Ryan? 110,000?
120, 130.
Okay. So let's say 120, 130,000. If we only print like 80,000 jobs, the market's going to be very geared up for that. And you're going to have very limited follow through, maybe even a false breakdown in the dollar on a miss. That's why I hope the ISM services is not a shit show today. If it is, then the market's really going to press. Euro's probably going to be trading up towards 114.50. into the ECB. Then you have the ECB that could, I mean, one of the other things, and I should talk about this really quick regarding the ECB. Lagarde, she's going to be questioned about the euro dollar and its role as I don't want to say a reserve currency, so to speak, but an alternative to the dollar. She's going to get questioned about this in the press conference. Everybody knows the ECB is going to cut. We got that. But she's gonna be asked about what the ECB's role is moving forward, because that has been the topic of conversation as of late. And she could really end up talking up the euro inadvertently. And then as a result of that, we have the jobs report, and like I said, if it's a miss but not a big miss, the euro, this is what puts the euro at 115, and then, which is, in my opinion, a very big pivot. You've been talking about the 115 resistance in the euro quite a bit as of late, Ryan. So how would you feel if the euro is trading back at 115 by the end of the week? Are you going to be a seller up there because you think it's the upper end of the range? I know you've been talking 112 to 115 range, or is this something that puts us at 120?
It's something I'll be looking at very, very closely, depending on where we are and how we get there. If we're trading 114.90 10 minutes before an NFP and it's a bad one, I'm not going to be too keen to hit it. But if we close above it, I'd even consider being long on a confirmation, because if we are breaking there, we probably are heading to the moon.
Yeah. Okay. Well, and the one point I want to make about the euro, and Dale, we're gonna come back around and get some final thoughts here ahead of today. One thing I want to make about the euro is it's way underloved. Everybody hates the euro. No one believes in the euro. No one believes in the eurozone. No offense, Steve. I know he lives in Greece, and he's an EU citizen. But it's underloved to a point where that is one of the catalysts that could actually drive the euro towards 120. No one wants to own the euro, but you might be forced out of the dollar into euros, so to speak. So
what's more hated, the dollar or the euro? Because I mean, there's as much dollar bearishness as euro bearishness, right?
I'd argue that the dollar is more near-term bearish, because I mean everybody's turning dollar bearish, but I think longer term everybody downplays the euro, doesn't think the euro is a viable alternative to the dollar, but really the euro is stability right now. You might call it crappy stability. You might call it really low growth stability. You could call it borderline deflationary, environment stability, but it's still stable. And that's the thing that Donald Trump is not, you know what I mean? So, and looks like Donald Trump is talking about the ADP number. What did he just say, Ryan?
He just said, too late, Powell must lower the rate. He is unbelievable. Europe has lowered 9 times.
Yeah. Anyone have, before we get in, my guess isn't here, I don't think we hit any views on rates, on bonds, on 10 years, on twos. Any views, guys, besides Donald hammering Powell?
I mean, I think the yields are going to end up eventually coming down. I think that the fixed income, this is the time you want to own it, and and I think yields are going to come down. But that's just an overall thought process. I think we've talked a lot about that. Dale, where we think that whether you're talking 10s or 30s, I think they're going to bounce from these levels, but that's just my general view, not like anything.
You wouldn't put money on it?
No conviction, none, zero.
Okay.
Yeah, at this point in time. Ryan, you have any thoughts there?
Not on yields. I'm watching this 450 in 10s. That's a bit of a marker level as to where we're pushing up. The interesting reaction we've got, though, is stocks are down on that ADP number. You know, in another alternate universe, when we got bad data like that, which meant the Fed were easing, we'd get a rally in stocks, but market's going the other way on that. So that's a bit of a tell. Bad data is bad for stocks.
Yeah, that is interesting. I know Dale's searching for his guest right now. Steve, you're here. Wanted to get your opinion really quick. Two opinions. One of them on the number that just came out. The second one is on the euro over the dollar. So what do you think here?
I think that the dollar at the moment is
A piece of duty.
is in a downtrend, and I think there are good reasons for that. There are a lot of question marks and potential upcoming issues,
Oh, here he is.
and I don't think any of those have really receded or gone away during the past several weeks. So, although it's not a slam dunk, I would definitely still remain cautious, and I would be willing to err in the side of more dollar weakness.
All right, all right, and I mean, how do you feel about like, I mean, the euro? Like I said, I think it's so underloved overall. But do you have any feelings about your baby home currency there?
I mean, there are different problems across the Atlantic, but without any doubt, there are problems in both sides of the Atlantic having to do with economic policy, etc. I think there is nobody that can doubt that. Um, it's, you know, we used to say that it's about what is the less dirty shirt, right? Um, I think we are still in the same situation. All shirts are extremely dirty. It's just a consideration of, you know, the timing, because there are, you know, times that Europe looks worse. There are times that the US looks worse. Currently, after the beginning of the tariff wars and trade wars, I think that it's more than clear that the US is a more dangerous place to be at the moment.
Very good. Dale, did you find your guest real quick? I'm
Yeah,
sorry.
Jerry's here. Jerry, please accept being a panelist. Yeah, I
Okay.
found him, Blake.
Okay, let me see. I'm gonna try to ping him too.
There, yeah, he's doing it now.
He's doing it. Okay, cool.
Yeah.
All right. Steve, thank you for your comments. K-Man, we missed you today. I know K-Man's gonna be gone for the next week. He's driving back to the homeland. So K-Man, we will miss you. Sorry your microphone wasn't working today. I know people wanted to get your opinions, but remember you can find it in find his opinions in the Forex Analytics chat room, and that's where you can chat with him all the time. And I'm sure while he's traveling, he'll probably be popping in the chat room talking about what trades he's in and whatnot as well. It's hard to get away from the markets when you're a 24-hour a day FX trader. That's for sure. Ryan, great to have your input. Great trade-off show that you did with Michael Brown. This week I actually watched it last night as I was doing analysis. So great stuff. And Dale, great calls on the markets, and I hope Uber is going to be your ticket to ride today.
Yeah, I like that ticket to ride the Beatles. All right. And you know what, guys, before you go, you know how they say money can't buy you happiness? But think about this. Happiness can't buy you money. All right. Anyway,
that's true.
Anyway, can you walk into a bank smiling and happy and go, "I'd like $1 million line because I'm so happy."
In your hand, you can. If you've got a gun in your hand, you can.
True, Ryan. Anyway,
you know something, Dale? I'm gonna try it out.
Are you? Okay, let me
give
know.
you feedback.
All right, and walk into the bank smiling, and someone let me know if they just throw money at you.
I'll start a kitty for his bail money.
Yeah. All right. Anyway, people think that I'm eating gummies. So to prove that I may be, I'm going to bring in Jerry Robinson, who's from at Follow the Money, the editor, publisher, Jerry. It's always good to talk to you. Your charts are really clean, and looking forward. I know you're probably long the world. Am I right?
Well, not the world, that's for sure. But
Okay, I mean, instruments,
yeah,
assets.
I would say there's a few that I really am long. I mean, we've been long Nvidia, we've been long Bitcoin, and these are just
Yeah,
core holdings.
yeah.
The world is changing, and we want to stay with it. But as I'm looking at all the charts this morning, as I'm thinking about all the different things, I've put up the usdebtclock.org for folks to see, and we're talking about $37 trillion in national debt.
How
And
long will it take us by the end of the interview?
right,
Will we
it
be at
could be,
37? We're
could
close.
be. We're
All
getting
right.
very, very close.
All right.
And
What's a
and this is
trillion? What's a trillion now and then? Here and there.
right.
Yeah.
Well, and also just to stress, and I'm the least political guy on earth. I mean, when it comes to red and blue, I throw my hands in the air and say a bunch of nonsense, just like George Washington, huh? Who said if we get involved in political parties, our country goes down because it divides us, it conquers us. And that's exactly where we are today, though. The nation has been basically cut in half through
Yeah.
a corrupt media and through corrupt political parties who pander to us. In fact, speaking of pandering, I just got back from the Bitcoin conference, and I
Oh,
thought
in
I was
Vegas?
in Vegas. I thought I was at a MAGA rally. I thought I was at a Trump. I saw more Trump hats than MAGA hats than I had expected. I don't know what I was expecting, but when I got there, you know what I didn't hear about, strangely enough, was the national debt very much. And you know why? Because the guys in power, the ones running the White House, the ones running the Senate, and the ones running the House of Representatives are all Republican. And do you remember hearing about Bidenomics and how it was driving the debt up for the last 40 years? Well, here we are. And now you even have guys like Elon Musk who were in the tank for the Republicans. And now
Yeah.
he's saying, you know what, this is a bunch of BS.
Yeah.
It's a bunch of BS. It's all BS. What this should really serve as is a wake-up call to anybody who takes these guys seriously. You can
Yeah.
give
What they say on the campaign trail and what happens in real time. The campaign trail is more like you're on a demo account.
yeah.
So it doesn't matter what you do.
Yeah,
You
but
just say, I was right. I was right. I'm making all this fake money. And then when they go live is when the rubber meets the road. And
that's right.
right. So they're live now and they're spending as
More
much or
than
more.
Biden. Yeah,
Yeah.
they're spending more than Biden. And where are the voices to come out and tell us, hey, you know what? We didn't vote for this. And we need more and more and more people to wake up and realize that the government is not going to fix it for them.
Yeah.
It doesn't matter what these guys say. So
Yeah.
they've even infected the Bitcoin conference crowd to where the Bitcoin, when I got
Now that's
involved,
political. An asset class is political now.
correct. When I first got into Bitcoin over a decade ago, the main thing it was about was monetary sovereignty. It was
Yes.
about freedom. It was about decentralization.
Yeah.
And now, of course, at least at this conference, I'm sure there's other places, but at least in this pond, which is a
Well,
big,
in the U.S.,
big,
in the U.S.
in
pond.
in the U.S. pond, you're absolutely right. It has become something quite unusual. And, so when I look at all the
Does it
different
change
things,
your view at all just because
not
it's politicized?
not on Bitcoin, because I realize that it's really just a useful tool. You got to realize. I mean, people who when I was in that conference in Vegas last week, I was trying to think how much money is in this room, and I guarantee you who knows that, and that's Trump and company, right? That's why they're there. They know that there's a lot of money held by these Bitcoiners, and Bitcoin's over $100,000 and going north. Trump's going to pump it, and so he wants these guys on his side. And it's one of these things where we just simply have to come to realize something we've been saying here at followthemoney.com for so long is that, nobody is going to fix it. You must have a financial plan. And when I was out in Vegas, for example, listening to the folks on the stage, they were making it sound as if all you needed was Bitcoin. You didn't need a financial plan. You just need to own a little bit of Bitcoin. And this is such a destructive message. Unfortunately, we've taught for so long that Bitcoin,
all your eggs in one basket philosophy.
Right, exactly. And we've taught for so long that the importance of having a diversified plan is so vital, and to see the kind of messaging that's going forth now as it gets infected with politics at the Bitcoin level is pretty disheartening. But the joke's on them because Bitcoin is transparent. Bitcoin is decentralized, and no government at all wants anything transparent. They don't really want the technology that's behind Bitcoin. They want the Bitcoiners' money, and they want to fleece them and scam them. And they've been doing a pretty good job of that. But
Jerry, for a long time, I've just had, sometimes my intuition's pretty good. Like before Moody's downgraded, I put out an X tweet that surprised me. I said the big, beautiful bill, because, I thought it was going to pass that Moody's would downgrade, and it happened 3 days later. With Bitcoin and crypto, I've always kind of felt in my bones that the U.S. government, because you said most governments don't like, this type of independence from the monetary system, that this was allowed to go on, this experiment, so that people began to embrace crypto in a lead-in to a CBDC, because it's just you're getting used to digital. And I do believe that during the campaign, President then nominee Trump was against a CBDC. And I think he has signed a bill or an executive order to go ahead with a CBDC. Do you know?
Well, we already have
Isn't
a
that-
CBDC. We already have a CBDC. I mean, we already have a digital dollar. I mean,
Oh, okay.
the whole FedNow system is practically working as a CBDC.
What's the difference? That we have to eliminate cash for it to be completely that way? Is that the only thing in the way?
Yeah, but even then, I think that they'll probably keep cash for quite a long time. I don't think you'll see the end of cash. I don't think I'll see the end of cash. I think it'll always,
good.
I think it'll always, have a purpose, have a role. But we're already digitized as we can possibly. We're going to get more digitized, of course, but it's already extremely digital. Pretty much most of the transactions are all operating through through digital means, and so. But I see your point. Bitcoin is always going to be the superior cryptocurrency in that kind of environment. If you're comparing it to, say, a CBDC, see, that's one of the things that I'm concerned about as well. Well, not too concerned anymore, but as more people come to realize what a real decentralized digital currency offers in terms of finite supply, an emission schedule that is, predictable, relatively or extremely low inflation, lower than gold. The people would say that's the kind of currency that we would want. And if the United States issues some sort of official, central bank digital currency, what are they going to do to that? They're going to debauch it. And so it's really, so in other words, if the government teaches us to have digital wallets by saying, look, we have the CBDC and now you got to have a digital wallet and you got to keep it that way. Well, all you end up doing is educating the public about how to use a digital wallet. And then once they have that, then they're going to look at the menu and they're going to see Bitcoin's a lot better to hold. So to me, the quickest way to onboard people into Bitcoin is to give them a CBDC and teach them how to use the digital wallet and then leave it to them. They'll say, okay, well, I don't want this stinky thing in my wallet. I want this other thing that's going up, not this thing that's going down all the time. So, But let me, I could talk about Bitcoin quite a bit because, again, it's one of the markets we've been in for a long time, and it's on the move. I'm expecting it to start really moving here as we head into the final half, especially as we get closer to October. We maintain a $275,000 price target on it for this year.
Wow.
We believe it'll hit that price.
You're way above a lot of people.
Well, there's so many different catalysts that
How do you
could.
how do you come up with that number? How do you calculate it?
It's cyclical, and we've been doing this. We've been doing this price target on the fourth year, every fourth year since 2013. We started
Wow.
it then, and we nailed the 20,000 in 2017. We got so I think we did 65,000 in 2021, and it got like 69,000 or wherever it went. And then this year we have 275, and it's just literally based upon cycle work and TA. And then, of course, there's these unknown catalysts too.
That's a triple in like a triple in 6 months.
Yeah, it is a triple in 6 months,
almost.
And if it does that, it'll actually be less than what it normally has done. So 275, quite frankly, is pretty conservative in my opinion, based upon the previous cycles. It may not be
Okay.
It may not be modest compared to some predictions, but anyway, we recently hit about 112,000.
Right.
Of course, this isn't the time to be piling in if you're bullish on Bitcoin. What we like to do is we use an extreme value zone. So we look for a 60 to 80% drawdown from the prior high. So back in 2021, it got about 69,000. Well, we waited for that to come down into the extreme value zone. Now the extreme value zone is about 44,000 to 22,000, which represents a 60 to 80% drawdown from the new peak. So we're obviously nowhere near that. So backing up the truck for Bitcoin now is a very bad idea, in my opinion.
And how about for gold? Same type of thing. Backing up the truck on extended and bearish the dollar, shorting the dollar. All these moves a bit long in the tooth.
Well, back let me close up Bitcoin and I'll move to gold because with Bitcoin, while we expected to hit 275 this year, and it's currently like 110 or whatever, 105. You would say, well, it sounds like a great time to buy it. Well, it may be. I mean, you may get that triple, but at the same time, a much better time to have been going in would have been earlier. And at this point, a DCA strategy is the best way to approach it, in my opinion. When it comes to gold, let me show a chart here.
Well, before you leave S&Ps,
yeah,
you have a year-end target for them?
No, I don't.
Okay.
But I think we will break through the previous all-time high quicker than we expected. Look at that V-shaped recovery. It didn't feel like it was going to be one. We bottomed on April 7th, and we rejected that level pretty hard, right around 4,800 or so.
That was a breakout going back a couple of years.
Pardon?
That was a breakout. If
oh,
you go
yeah,
back
right.
A few years.
Exactly. That's a very good point. Yeah, 4,800. Well, then as you come up here, we got that 200-day moving average. We tested. We push up. Yeah. We're so close to a new all-time high. It's going to freak people out, Dale, if they wake up in the next month or two and they hear that the stock market's at an all-time high. I mean, that's, after all the things we've been through over the last few months, many people still think that the market is not going to go up, and that tells me it probably will. Right now, if you look at the market breadth on the 200 SMA, we're about flat. It's about 51% of stocks above the 200 SMA. But let me get to the gold price because there's a particular chart that I want to show you here. Let me see if I have it.
Gold-silver ratio?
Well, the gold-silver ratio certainly favoring silver.
Yeah,
silver having that nice breakout too.
Yeah.
Let me see. I'm going to show you a different chart. Let me pull up one more chart here, and I'm going to show you something that I think is pretty interesting. Let me pull this up. Pardon me, Dale, while I do this. Almost there. Basically, it's showing that if you go back on the price of gold for the last 40 years or so, let's go. Let's go say 25 years, and then let's go 40. There we go. Okay, let me bring this chart over and then you'll be able to see what I'm seeing. What I've applied here, this is a monthly chart. And then this is also has an RSI applied. So we got 40 years of price data here. And what's interesting is you'll see that on the RSI, we've only gotten to this level 4 times in the last 40 years. First time on the RSI was around that 2005, 2006 move. You got that long upper wick there, which always you got to watch out for, especially on a monthly chart. It's going to tell you you're probably going to consolidate for a while. And sure enough, you did. It took several years to overcome it. Then we peaked out again in 2008, and you'll see that long wick there hampered prices for, again, 2 or 3 years before it could overcome it. Then we got another one of these here. This one wasn't as high. We'll leave that alone. That was in 2011. That was a blow off top. And then we didn't get past 2011 until when? All the way till COVID. So COVID, we finally overtook the 2011 high on gold. And then, of course, in the wake of COVID, and then, of course, with other things and inflation and all of this, gold started really rising. Now, there really hasn't been, and I went back and looked through different presidents to see Mr. T, Trump, is the best president for gold, bar none that I can find. The metal just loves Mr. Trump because the man makes more debt than anybody we've ever seen, and he's on track to do it again. He's doing it again. And so here we go with another round of trillions and trillions and trillions of dollars of debt to put on your grandkids' necks. And you've got gold going straight up. Now, gold is now at a place that it's never been over the last 40 years in terms of the RSI on the monthly. It's never been up to 86. This is really overstretched. So on one hand, I would say, yeah, gold is probably due for a pullback to maybe the $2,800 to $3,200 level. I think it probably holds 3,000-ish. But at the same time, maybe not, because again, the last time Trump was in power, gold went nuts, and that was even before COVID. So I mean, he just has a thing that when he's in office, gold starts rising. The uncertainty is there, and so to think that gold will just stop because the RSI hit a max is probably not likely while we're underneath the Trump regime. So I think gold, still has potentially more room to run. My price target on it this year was 3,200, and that got smashed. My price target on silver.
That's a great call, though.
Well, thank you. And if we look at silver, we'll see silver is nowhere near its peak. It's still below the big peak back in 2011. When we got about $50, we're still trading well below. That's why that gold silver ratio favors it so much right now. But as much as I like gold, as much as I like Bitcoin, wisdom tells you to keep these things in check and to have a nice diversified portfolio. It's very important, I think, for the average person out there. Especially if you're working a job, you're trying to do stuff, trying to take care of a family, you go all in on something, you're going to get hurt most of the time. If you look at something like an NVIDIA, NVIDIA has just gone nuts, and we can see where we are now. In fact, NVIDIA, in my opinion, is getting ready to go on another big rally because those who know how this monthly RSI works, it's not actually below the 70 where you get all the action. It's once you cross above the 70. So right here, when you're up here and you're going above the 70 and 71, 72, all the way up to you can see NVIDIA tends to go up to the 90s or so when it really runs. And we're just now crossing the 70. So in my opinion, this could be another big rally mode for NVIDIA as well, which makes sense because we are in this AI revolution,
Okay, well, to me, that RSI, if NVIDIA makes new highs, that's a pretty nice divergence. So to me, it's a non-confirmation compared to gold that you showed with this record reading in RSI. That's a confirmed high. So that's bullish. There could still be a pullback. But when divergences, Jerry. So, it's not only the number, it's a comparison to prior peaks or prior lows that tell you whether or not momentum is continuing or beginning to wane,
Right.
right?
Right. Yeah,
Okay.
absolutely.
So, NVIDIA, I'm not saying it can't go to, 160, 170, and the RSI go to, 75, but I'd be surprised to see it trade up at those high, take out that RSI high from wherever it was.
No, yeah, I don't expect that here.
Yeah.
Yeah, I don't expect that here.
Oh, you got a 97 target here for the Dixie?
Yeah, right now, when we look at where it's at now, it's really hampered by that declining 50, which is falling fast.
Yeah.
The 100 to 101 level was the area that it was from our vantage point was trying to hold. It's hanging around 99 now, and this is quite interesting because those who remember the first Trump, and I think we talked about this last time, but those who remember the first Trump inauguration back in 2017 may recall that the dollar rallied, and you probably remember this very well, Dale, but it rallied right into the inauguration. And then right after the inauguration, it came right down. So we said, wouldn't it be funny if that happened again? And sure enough, it did. In October, as it became clear that Trump was going to win, the dollar began to rally strong. I mean, from 100 or so, the low pretty much of the cycle, near the low, went all the way up to nearly 110, and it was pretty wild. And then the inauguration. The inauguration was literally the peak, and then sure enough, it started coming down with the same vengeance that it went up in the wake. And so we're down here in the 99 level. This is obviously part of the reason why we're seeing gold at record levels. It's part of the reason why we see so much strength in other hard assets as well, and some assets. But the dollar is these levels, this kind of movement in the dollar. People whine about volatility on Bitcoin. I mean, look at this. I mean, this is a volatile currency here. So to me, the volatility in the dollar, the yields we've been facing, the warnings we're hearing from J.P. Morgan, Jamie Dimon talking about the bond market, which doesn't look good. It's a real big economic mess that we've got on our hands, and nobody in Washington is willing to face up to it that I can see. I don't really see too much in the way of spine or backbone, and it almost appears, Dale, that the American people aren't demanding it. It seems like it's just a-okay, As long as the culture wars get won, apparently it doesn't matter what happens to the economy. And to me,
Oh, it will.
That's at some point
Well,
it
I
will.
mean, yeah, I mean, we're not in a recession yet, right?
Well, I think we've probably been in rolling recessions throughout
Okay.
the last few years, and just kind of affecting different areas. I don't think that we are necessarily right this second. The NEBR will, they're the decider, but no, I don't think so. But at the same time, the economy overall is saddled with so much baggage and so much future spending, the commitments that something's got to give, Dale.
Yeah. So, the people aren't responding because uh, the country is used to the have-nots not having. So the country will respond when this bull market in equities ends and the real estate market cracks, because those are the people that still have assets.
True
And
that.
if they start feeling like they're getting poorer based upon deflating than inflating assets, that's when it gets noisy. When
Hmm.
401ks aren't performing and people won't get their mail and they won't open up their statements. But, I don't see that happening for a while. I think, we could have a melt up to 7K S&Ps or higher,
Sure.
like some of the bulls are saying, especially if the Fed starts coming in July.
Oh, yeah.
Right? So,
Absolutely.
yeah,
Absolutely. I would expect that, again, those who hold high quality assets in this kind of environment are probably going to be the few people who do well over time. But the folks
yeah.
who don't, the folks out there who don't own assets and they're just working for a living and they're just trying to make it happen, this economy is not going to be kind to them over the next 10, 20 years. It already hasn't.
Okay, best idea for the summer, Jerry.
Best idea for the summer, I have to go back to Bitcoin. I would say that Bitcoin is going to, and Ethereum as well. There's one chart here on Ethereum as well that looks pretty interesting.
It's
Ethereum,
outperforming now, isn't it? After years of underperformance?
I mean, it's certainly been outperforming since April 7th.
That's what I mean.
Yeah. Yeah, certainly. If we look here at where it's at now, it's been flirting with this 200-day. And there's
Flagging.
yeah. And, Wall Street is trying to extract yield from Bitcoin. Bitcoin really never was designed to do that.
Oh
But
yeah,
Ethereum,
there's bonds on Bitcoin now, right?
right, exactly. Bit bonds that they're working on. But
Oh, that'll
Ethereum,
screw it up.
perhaps, but Ethereum is designed, specifically to generate yield. And so one of the things that we haven't seen from Wall Street is an actual Ethereum ETF that actually pays the staking yield to investors. And so Wall Street's going to love Ethereum when they're able to monetize it the way that it's supposed to be.
You mean Larry Fink or Wall Street?
Well, what's the difference, right? So, but
Good one, Jerry.
but yeah, they're really going to like, and I think more people will onboard into Ethereum because Wall Street's really going to push it. This is, to me, Ethereum or Bitcoin, and I have to probably say Ethereum may be the winner this summer out of the two because it has so much it's such a catch-up trade.
Yeah.
So
yeah,
I would
reversion
say,
to the mean.
Yeah, I think so. So I think we'll see potentially a new high on Ethereum this year, maybe 4 or 5, maybe 5,000 or so, and then Bitcoin moving up to that 275. And maybe when I come back, maybe when I come back, we'll find out if I was right.
Well, we always do, and you've been real right about your themes and markets, Jerry. Otherwise, I don't play softball with my guests.
Right.
So, I do have a memory. I don't know how I could remember what you were saying, but you've been bullish stuff since we met. And so people that heard you today, they're going to want to know how to find you, Jerry. Why don't you show your website and how they could get involved with you?
Absolutely. So we have a website called followthemoney.com, and this website is all dedicated to education and helping people learn how to invest, how to trade, but also how to put together a financial plan and make it work. Anybody out there who is worried about the economy, they're looking for solutions that they can implement. We don't play any funny games. We don't use leverage. We move right into real world practical solutions that people can use, no matter how much time they have. And we do have memberships where most people end up. Most people come in and start listening to our podcast. They start checking out all of our free resources. Then they eventually come over and they want a plan. And our plan comes with, courses. It comes with trading software that allows you to learn how trends work. It comes with all kinds of ongoing education as well, weekly webcasts and all of that. I would encourage people to come and just check out our free resources and begin that way. And again, I appreciate the work you're doing, Dale. I mean, you're doing a great job over there, and I appreciate you having us back.
Great having you back. Any Elvis on the outro?
Oh gosh, I have a chalky throat. I have a chalky. I was just in Vegas. Let me think of a good one, huh? Bright light city, gonna set my soul on fire.
Oh man!
Come on, man.
If I said I needed you,
oh, that's good.
You said
that's
you would always be.
Yeah.
All right.
I like it.
What a show, Jerry. Jerry, I hope that Pips take over all of you and your subscribers like a flood, and your cup runneth over.
Thank you, brother. I appreciate that. And hey, things don't work out for us. You and I are going on the road with our Elvis sideburns.
We could learn how to parachute and do it like in that movie. The Flying Elvis team. All right, Jerry Robinson, everyone at Follow the Money. Follow Jerry, my trading warrior brother.
Thank you, Dale.
All right, buddy. And that's our wrap for today. Everyone have a great day. You could join the team in 11 minutes on the morning edge. So if you're standing on the ledge, come back off the ledge and get yourself the edge in the morning edge. And don't just count your pips or instruments, count your blessings. Adios, everyone. See you tomorrow. Thanks again, Jerry. You're welcome, everybody.